For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir Technologies continues to be a polarizing stock for investors. As one of the most prominent names in advanced data analytics, Palantir has developed a reputation for creating cutting-edge software solutions that cater to both government and commercial sectors. While I am a firm believer in the potential of the company's operations, I remain highly cautious when it comes to valuation, a critical aspect of any sound investment decision. The primary focus of this analysis is the potential impact of a recession on Palantir's stock price. A significant economic downturn would likely act as a catalyst for a major correction in its valuation. Currently, Palantir stock has surged by an astonishing 360% over the past 12 months, a growth trajectory that appears to be driven largely by speculative enthusiasm and momentum-based trading behavior. This conclusion is supported by the company's forward generally accepted accounting principles price-to-earnings ratio, which stands at nearly 160, a figure that suggests excessive optimism about future earnings growth. Additionally, Palantir's trailing 12-month enterprise value to earnings before interest, taxes, depreciation, and amortization ratio is over 300, further underscoring its current overvaluation. These metrics set the stage for significant downward pressure on the stock in the event of any macroeconomic headwinds or changes in investor sentiment. To provide a quick overview for those unfamiliar with Palantir, the company specializes in developing advanced software platforms designed to analyze and manage complex datasets. Its primary offerings include Gotham, a platform tailored to the needs of government agencies and defense organizations, and Foundry, which serves commercial enterprises by streamlining their data operations. These platforms have become indispensable tools for clients seeking to make data-driven decisions, enhance operational efficiency, and achieve substantial cost savings. One of Palantir's most notable advantages lies in its ability to perform well during economic downturns. A significant portion of its clients relies on its services for essential non-discretionary operations, such as cost-saving measures and mission-critical processes. This reliance provides Palantir with a degree of recession resilience that many other companies, particularly those in discretionary sectors like entertainment, simply cannot match. For example, Tyson Foods reported savings of $200 million over 24 months by utilizing Palantir Foundry, demonstrating the tangible value that Palantir's solutions can deliver. Additionally, other Foundry users have reported achieving a 30% reduction in costs associated with supply chain management, inventory optimization, and procurement processes. Furthermore, Palantir's government contracts account for 55% of its total revenue as of 2024. These contracts are typically less sensitive to economic downturns as they are often tied to critical areas such as defense, national security, and public safety. This government revenue stream provides a layer of stability for Palantir's financial performance, even during periods of broader economic uncertainty. However, it is important to recognize that no company is entirely immune to the effects of a recession. A moderate slowdown in revenue growth may have a relatively minor impact on the valuation of a fairly priced company. However, for an overvalued company like Palantir, even a modest contraction in growth expectations could lead to a dramatic decline in its stock price. This dynamic is particularly relevant given current recession forecasts. Analysts at JP Morgan estimate a 45% probability of a US recession by the end of 2025. Although the US economy has displayed resilience in 2024, various factors, including declining consumer spending, reduced labor demand, and potential fiscal tightening, could slow economic growth in the coming years. Deloitte has projected that U.S. gross domestic product may contract by over 2% by 2026, driven by trade tensions, government spending cuts, and persistent inflationary pressures. Since Palantir generates nearly 62% of its revenue from the U.S., these forecasts are particularly concerning for the company. Historical examples provide valuable insights into the risks associated with overvalued companies during recessions. During the dot-com bubble, Cisco's forward price-to-earnings ratio exceeded 140, but its stock price subsequently fell by over 85% when growth expectations were revised downward. Similarly, Amazon's price-to-sales ratio peaked at 37 during the same period, only for its stock to plummet by 90% when the bubble burst. Other notable examples include Tesla and Google, both of which experienced significant valuation declines during financial crises. Tesla, for instance, struggled to secure funding during the 2008 financial crisis, while Google's stock price fell by over 55%. These examples illustrate the vulnerability of overvalued companies during periods of economic contraction. In Palantir's case, a severe US recession could result in a similar scenario, with the stock potentially losing 50% or more of its value. Given these considerations, I have decided to postpone any investment in Palantir for the time being. Like Warren Buffett, I believe in maintaining a strong cash position to capitalize on opportunities to purchase undervalued equities when market conditions are favorable. With 3,000 shares expected to be outstanding due to share issuance, the company's earnings per share would amount to 87.5 cents. Assuming a conservative price-to-earnings multiple of 75, the projected stock price for December 2029 would be $65.63. When compared to the current price of $80.55, this projection implies a compound annual decline rate of 4%. Additionally, discounting the 2029 price target back to the present using Palantir's weighted average cost of capital of 16.32% results in a highly negative margin of safety exceeding 61%. In summary, while Palantir is an innovative company with a strong operational foundation, its current valuation poses significant risks for investors. The combination of speculative market behavior, macroeconomic headwinds, and overvaluation creates a precarious situation that is unlikely to deliver favorable returns in the near term. For those interested in investing in Palantir, patience will be essential. Waiting for a significant correction in its stock price, potentially coinciding with the next US recession, will provide a more prudent entry point. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.